brief us about what an alternate investment fund is.
So Suryakala, alternate investment funds are like privately pooled investment vehicles. Category 2 AIFs are those which fall neither in category 1 or in category 3.
Sir, like we have also heard that category 3 AIF is tax efficient. It's been designed as tax-free income for the investors. How could that be possible, sir?
Yes, so Suryakala, what happens that
For a new investor, who's new to AIF, so what are all the advantages and risks they should aware before investing?
and we are going to pick robust, solid businesses which we believe will create a value in the next few years.
Hi, hello, welcome to the Market Insights by J2 Wealth. Today we have Mr. Sandip Bansal. We are pleased to welcome Mr. Sandip Bansal, a Deputy Chief Investment Officer at ASK Managers. Mr. Sandip Bansal has 20 plus years of work experience, in that 16 plus experience in equity market. He previously worked at SBI Life Insurance as equity fund manager and has rich experience in UBS Securities and Kotak Institutional Equity. And Mr. Sandip Bansal is a chartered accountant and company secretary and MBA graduate in IIM University, Ahmedabad. At ASK, he manages like ASK Growth, ASK Lighthouse, and also going to lead a newly launched ASK Special Opportunities portfolio. Hello sir, welcome to J2 Wealth. So before going to any questions, brief us about what an alternate investment fund is.
So Suryakala, alternate investment funds are like privately pooled investment vehicles which invest in different asset classes as per the strategies which they've enunciated to their investors. The investors in general is a relatively selected pool of investors. So it is pooled investment vehicle.
Sir, we have heard that in AIF there is 3 categories, 1, 2 and 3. Can you please explain us on that?
Sure. So category 1 AIFs are generally meant for investing in economically and socially beneficial sectors. So they are generally venture capital funds, infrastructure funds or SME focused funds. Category 2 AIFs are those which fall neither in category 1 or in category 3. They are generally infrastructure funds or they are generally private equity funds or debt funds. Category 3 AIFs are those AIFs that could use leverage or complex trading strategies including hedge funds.
Sir, like we have also heard that category 3 AIF is tax efficient. It's been designed as tax-free income for the investors. How could that be possible, sir?
Yes, so Suryakala, what happens that in a Cat 3 AIF, the taxation, whether it be a long-term capital gain tax or a short-term capital gain tax or other taxes, they are leveled at the entity of the fund itself. So the returns that the fund provides to its investors is after paying those taxes. Hence, as the funds have already paid the tax, the investors don't need to pay them again. So it is not that the income is tax free, it is just that the taxes have already been paid at the fund level and hence the investors don't need to pay it again.
For a new investor, who's new to AIF, so what are all the advantages and risks they should aware before investing?
Sure. So AIFs offer the opportunity to invest in unique investment methods or opportunities which would not be available to the investor otherwise, and the potential returns associated with such uniquely designed opportunities are hence available to the investor. That is the key advantage of AIFs. The risks associated with AIFs are generally the risks that will be associated with those uniquely defined strategies or the asset classes in which they invest in. The way we think about it, Suryakala, as public equities asset managers, is that since we invest in public equities through the Cat 3 AIFs that we have, what we believe is that investors should understand the thought process and the strategy with which we are investing. So the benefits are the benefits which are associated with investing with such a strategy, and the risks are also very well laid out in terms of the what are the risks associated with a particular investment mandate that we are running. So we would like to see AIFs more as a platform, and the risks and benefits are more associated with the strategy which is using the platform.
It's a general question, sir. So what are all the themes or sectors is going to drive for next 2 to 3 years?
So we believe that in manufacturing, India has a huge opportunity. This started a few years back, and with the tariff scenario that is playing out globally, we believe that India stands in a more beneficial position, and the global diversification of supply chains, China plus one, is only going to get accelerated post that. So that is a theme which we are bullish on. We also like the infrastructure theme, where a lot of work has gone in by the government over the last few years, which we believe is going to continue over the coming few years as well. The private sector capex cycle will also pick up. The interest rate cuts and lower interest rates obviously are beneficial to these sectors. We also like discretionary consumption. We believe that is going to be supported by the tax cuts that have been announced in the budget, a lower interest rate environment, plus the RBI has also eased a lot of macroprudential norms, so lending to the consumer sector is also likely to pick up. We also like the pharma sector. While there are a lot of concerns surrounding the pharma sector, we believe that the pharma sector is in a good position because of its essential nature, and given the low cost manufacturing at scale which India is able to deliver to the rest of the world, we believe that India has a distinct competitive advantage there.
About funds managed by Mr. Sandip Bansal at ASK. ASK Lighthouse has been a very successful offering. Can you please share us what has contributed to its strong performance?
So Suryakala, ASK Lighthouse is a fund in which we are investing in 3 or 4 themes at a given point in time. The selected themes for us as of now are manufacturing, infrastructure, energy and defense. What we have been able to do in this fund is that we've invested in around 28 stocks. These sectors have done well in the recent past, in spite of the fact that many of the businesses by character are mid or small cap in nature, because the manufacturing sector in India is at a relatively nascent stage in our view. Plus, what has contributed to the performance of the fund is that we have been able to capture the opportunities available in the market in these sectors, both in terms of a relatively good entry point, and whenever we've found the valuations to be relatively full, we have sold those stocks and moved capital elsewhere. Because all of the themes in the fund are high growth themes, where there is a lot of business action, and because we were able to get into the right set of stocks, I think it has contributed to the performance in the fund, and we believe that the underlying themes and sectors is a really long-term structural story, which the current evolving environment, as we discussed in a previous question as well, is actually going to help these themes.
Sir, brief us about ASK growth portfolio.
Right. So ASK growth portfolio is it's like a flexi cap portfolio where we invest across large caps, mid caps and small caps. Therein we go by the mandate that we need to invest only in high quality, high growth businesses. By high quality businesses, we mean businesses that are run by superior quality managements, where the competitive advantages of the business are very high, wherein the minimum return on capital employed of the business is 25%, and we focus on long-term sustainable growth of the business because we are investing with a time horizon of at least 3 to 5 years. By high growth, we mean businesses that are growing at a rate of at least 15%, and this growth we would like it to be sustainable, durable, and as predictable as possible. And we hold this portfolio from a long-term perspective, because here what we are essentially playing is the compounding nature of earnings and businesses. This is a portfolio in which we invest across different sectors in the economy.
Coming to the new launch ASK Special Opportunities portfolio, so what is the core idea to start and how it differs from the ASK Lighthouse and ASK Growth?
Sure. So, ASK Special Opportunities portfolio is a portfolio which we've recently launched. We believe that the current environment of market volatility is an opportunity for investors to benefit from long-term investing. Markets have given a good correction, and the underlying breadth of the market is offering a lot of stocks which in our view are available at attractive valuations from a long-term perspective. So, in the ASK Special Opportunities portfolio, what we are doing is we are looking at raising and deploying capital over the next 3 to 4 months, and we would like to buy businesses in broadly 2 buckets. Businesses which have a lot of valuation comfort because of either short-term uncertainties or some macro trends, or because of sector-specific issues, or because of company-specific events, or because the business cycle is bad in a commodity business. And we would like to utilize that opportunity of short-term pain from a longer-term gain perspective. The other bucket which we are playing is businesses which have underappreciated earnings. Those earnings are actually higher than the market or the underlying industry, but the market is currently not factoring that in, or the business has a lot of latent earnings potential. Let's say if there is a new capacity that is going to get commissioned in a year or so, a couple of years, but the market is currently not factoring that in, or if the industry itself is at a relatively nascent stage and we believe that earnings growth is likely to be high. So, essentially in this fund, we are looking at playing companies which either have a high margin of safety and valuation comfort because of undue pessimism in the market, or which have underappreciated earnings. The idea of this fund is to return money to investors in a period of 4 to 5 years, or if the money doubles, or at the discretion of the portfolio manager. Similarly, at the time of raising capital, what we are looking at doing is we will raise capital over the next 3-4 months, or if we reach about 1,000 crores, or again at the discretion of the fund manager. This is again a portfolio which is market cap agnostic, so it's a flexi cap portfolio, and this is also a portfolio where we are going to invest across the different sectors in the economy. But the stocks that we are going to pick is going to be on a bottom-up basis, and we are going to pick robust, solid businesses which we believe will create a value in the next few years.
Sir, this session is completely very informative. Thank you for spending your valuable time with us today.
Thanks a lot, Suryakala, for having me.
Thank you, sir.
Thank you.